Yeah. Right, we've got a few people that are joining us. I'll keep an eye on other people coming in, but I think we should get started. So thank you to those people that have joined us today. It's not often we get excited about tax, but we have the lovely Jamie here, who Laura and I met, we were just saying, over a year ago. Jamie comes from a sort of accountancy background, so he's worked with some big accountancies. He then moved across to Coconut, which is when we met him, and he's recently set up as co-founder of Tax Ninja. And the thing that we like about Jamie is that we actually understand what he's talking about, which is a good start for someone in media. So Jamie's going to talk through today a bit of the basics about setting up as a limited company, a bit of information around IR35 and what sort of tax implications are, and we'll get stuck into that. I think everyone that's joined is aware of Liberty Hive, so I don't think I need to do too much of an introduction. But the reason we've got Jamie here is because we are a community of people that we connect media specialists to companies. We've got a community now of over sort of 450 people, so it is a relevant topic, and we hope you find it useful. So on that note, I will hand over to Jamie.
Perfect. Cheers, Kate. Thank you very much. Can everyone hear me okay?
Yeah.
Yeah.
Perfect. Just checking. So just, I know Kate just mentioned that there, but about myself, I've been an accountant for over 15 years, specialising in freelancers, small, medium businesses, so your sole traders, your limited companies, your partnerships, whatever it may be. And I worked in practice. I then went to work for Coconut, that was a fintech company that sort of focused on sole trader software. Always had the burning desire to set up on my own, and that's where Tax Ninja comes from, really. But what I also really enjoy is just like this sort of content, so actually just educating people that, you know, have never gone self-employed or are getting told to set up limited companies, but they don't know what it entails. So I thought it'd be a really good place, and like we said, we've worked before together, Liberty Hive and myself, so we've picked that relationship back up. And we'll be doing probably a few more of these around different topics, around just tax, different things, IR35. But this one today mainly focused on limited companies and sort of the inner workings of that. So I'll put it as getting started as a freelancer. What we'll do is I'm going to whiz through the presentation. There's probably a bit of a Q&A at the end. So if you do have any questions, just drop them in the chat. And then once I've finished the presentation, we can run through them. Again, at the end, I'll give you my details. So if there's anything a bit more personal circumstance sort of area of topic that you don't want us to discuss on a public webinar, then you've got my details and you can sort of ask away. So the very first thing that, you know, comes into people's minds is, right, I'm looking for these roles. Do I need to be a limited company? Do I need to be a sole trader? Is it a permanent role? And I'm just going to talk here very briefly just about the difference between a sole trader and limited company, really. I'm going to talk about the taxes associated with both, and just to give you a bit more information around those to make a bit more of a decision if that comes your way. So when you're a sole trader or a limited company, we always say to people, and I say to any of my clients that come through, we really want to look at, if you anticipate that this is a business that you want to set up, you want it to grow, then set up a limited company. I have clients under my care where, you know, they earn, you know, 15, 20,000 a year. They're happy with what they earn. They stay as a sole trader, set up as a sole trader. But the advantage of a limited company, you start seeing the benefits of setting up as a limited company, the tax advantages. When you turn over around 25 to 30,000 pounds, that's when you really do want to consider a limited company. Limited companies have limited liability. So, you know, if you ever get in problems with the limited company financially and things like that, it does stop at the limited company and not you as the individual, which attracts many people to limited companies. What does come with limited companies is you do have a lot more filing obligations. So you would need a set of company accounts prepared at the end of a trading year. You have to do a self-assessment tax return. There's payroll, VAT, if you need to set those up, and I'll talk about those a little bit later, whether that you even need them. So there are more obligations that come with a limited company, whereas a sole trader, you do have unlimited liability, because a sole trader is you trading as you, the individual. So when you set up, you do a self-assessment and it's all in your name. So if the business that you set up in your name comes into debt or anything like that, it's all under your name. The sole difference really with a sole trader is that you only have one filing obligation at the moment, which is the self-assessment tax return at the end of the year. So like there's some of the key differences when people are looking at both sole trader limited company. I've also just touched on here that IR35, and I'm going to talk about IR35 shortly, is only related to personal service companies, which is basically limited companies. So when you're a sole trader, IR35 doesn't apply at all, because you are the individual and you will pay your taxes accordingly. But we'll go through that in a little bit more shortly. So IR35, it's very topical, it's very relevant to anyone that's setting up a limited company, seeking a contract, talking to agencies. They'll always talk to you about its IR35 status of the role that's being offered. And basically, if you don't know what IR35 is, it was a legislation designed to close a loophole where, say, for example, I'd worked at a company for 5 years in an accounting practice or whatever it may be. And then I was like, right, actually, instead of paying all my tax and NI like I do, getting a salary and a pay slip, I could set up a limited company, work for the same company, and actually have a load of tax benefits where I pay a lot less tax. So IR35 was introduced in, I think it was like 2000 by Gordon Brown, to sort of mitigate this problem that people were leaving their employment that they've worked at for 5 years, setting up a limited company and just continuing to work through that and take advantage of all these tax breaks. So IR35 really looks at the working relationship. So are you genuinely a worker coming in to do a job, then leaving, or do you have more of an employer-employee relationship with your client? And that's really what IR35 looks at. And what you'll commonly hear is, are you outside or inside of IR35? So quite a lot of agencies these days actually post a job and they'll say whether it's outside or inside. And the definition really is, if you are outside of IR35, you're outside of the regulations, it means that they don't see you as an employee-employer relationship. And with the outside IR35 status, that's when you can actually, have a limited company, conduct that role through a limited company. You can pay yourself a salary, we can draw dividends, and you're responsible for all your taxes. When you're inside IR35 or caught by this off payroll working rule, it means that they consider you for tax purposes an employee of the end client and therefore subject to paying PAYE national insurance like you were an employee. So these off payroll working rules currently, they're now applied to the private sector. Before it was just the public sector, but in April that changed, and it's defined as medium to large businesses make the decision for you. So I've just jotted down here, and we'll share the slides after this, but the definition of a medium and large business. So you can see the turnover, the balance, if they have 50 employees. If they fall into this criteria, so say you're going to work for someone that falls into this medium large business, they will make the decision of whether you are inside or outside of IR35. And how they do that, they use this thing called a CST tool, or CEST tool, which is a check employment status for tax, which basically they go on government website, they key in the details of the role, and that will define whether HMRC believe you to be inside or outside of IR35. Any business that doesn't hit this medium or large criteria, so say you are going to take an agency role, it's a smaller company that falls below these, doesn't hit these criteria, then the decision remains with yourself whether you are inside or outside of IR35. And what will happen there is, what commonly happens is you probably hire maybe an accountant, someone like myself that would say, send me over the contract that has been proposed to you. We'll have a look for the contract to look at the working practices. So, and we can advise on whether we think you're inside or outside of IR35. But with these smaller businesses, if you get these contracts, the decision remains with you. So what we will do is try and work, what accountants do is try and work with you to see that you're outside of IR35 and in control of your salary, dividends, and how you manage that. And what we'll do is we'll talk a little bit more about the limited company and the benefits around that after this. But that's a very brief overview of IR35. And I will probably do another webinar around IR35 because it's actually quite a chunky thing. It's not the funnest thing in the world, but that is the very basics of what you would probably need to know for IR35 purposes. And that just gives you a bit of a ground. But if you do have any questions, again, drop them in the chat. So then, when people set up, ultimately everyone wants to know, what taxes am I going to pay and how does it work really? So when you set up as a limited company, the very basic concept is you have your income less your expenses, which will give you profit. With a limited company, the profit is taxed at 90%, which is corporation tax, which the company pays at the end of a company year. And then you have around 9 months and 1 day around that to make the payment for your corporation tax for that year. Thereafter, what the remaining funds in the company, it's called retained profit, and that's available to pay out as a dividend. You can leave it in the company, you can reinvest it, whatever you want to do with it, but that money is available for you to either draw down on and pay yourself or things like that. What we do as accountants is work with you to make sure this expense section, when we say income less expenses, there's many different things you can claim to help reduce the profit, therefore reduce the corporation tax paid. What we do is we work with you to make sure that, you know, you might have personal expenses that you're paying for anyway, but if you put them through the business, you're going to save corporation tax. So we really, you know, the job of an accountant is to work with you and make sure you're claiming all these expenses through the business to limit the amount of corporation tax that you actually have to pay at the end of the year. The perks of a limited company is that we have this, you pay yourself out of the limited company, and we do that of a mix of salary, so like a PAYE salary. So we basically say, if it's me, I've set up a limited company, I pay myself a small salary, and then everything else I pay in the form of dividends. And the reason for this is what you'll see here on this slide is that dividends are taxed slightly different to normal income tax. So every tax year you get 2,000 tax-free, so you can pay out 2,000 from your limited company tax-free. There's no tax payable, and that's separate to your personal allowance. And then we have the dividend rates, which are lower than income tax rates. So instead of paying 20% in the basic rate tax band, and as you see there, it's up to £50,270. That does factor in the personal allowance and tax-free dividend allowance, but you'll be able to pay 7.5% instead of the 20%. And then anything above the £50,271 is taxed at 32.5% instead of 40%. So that's where we start seeing the benefits of the limited company and the tax advantages that there can be. And then what will happen is we don't necessarily have to pay national insurance. We can still qualify for your state pension and your benefits, but with like a employment or a sole trader, you pay national insurance rates. So it just works out that we save on the national insurance through a limited company. And then I will talk about a sole trader taxes just in comparison, so you can see the difference that I'm talking about here. And again, a sole trader, you're the individual. Again, the concept is similar to a limited company. You have your income, less your allowable expenses, which gives you profit, which is subject to your personal taxation. Everyone has the personal allowance, tax-free. And then, as you can see here, when you're a sole trader or an employee, we pay tax at 20 and 40% instead of those 7.5% and 32.5% on income tax. But as a sole trader, they have to pay national insurance. So they pay two different forms here, as you can see. We've got the Class 2 national insurance, £3.5 a week if profits are over £6,500. So as you can see here as well, is these national insurance rates kick in earlier, but before the personal tax allowance. So you'll actually be paying national insurance at an earlier rate before you pay income tax. And as you can see, we've got the other national insurance, which is 9% on profits between £9,568 and £50,270, which sort of aligns with the tax brackets, and then a further 2% on profits. And this is really, excuse me, the key difference when we're talking about sole trader limited company. We can see that we've got this whole additional national insurance that sole traders have to pay. We can see the difference between the income tax and the dividend rates. With sole traders, you don't get this 2,000 tax-free allowance for dividends. Like, that doesn't exist. There's not an equivalent. So that's where we always talk to, clients or prospective people that are looking at limited companies and saying, look, if you anticipate that you're going to be earning or trying to build a business to grow, then set up as a limited company. And I think what we have to remember with the dividend rates and sole trader rates is we have to collate all sources of income on a self-assessment. So when we come to the end of a tax year, you'll think, okay, I've paid myself £30,000 in dividends and I fall into this 7.5% bracket. But what we have to remember as well is if you've worked elsewhere during a tax year, you may have used some of this allowance up already. So for example, if you've earned 60,000, for example, for a PAYE employment, your tax has already been deducted. We still have to report that to HMRC and say what tax was deducted. And then you've gone self-employed or you've gone for a limited company and you've taken another £10,000 out. So normally people will go, oh, that's £10,000, 2,000 is tax-free, which is correct. But the 8,000 would be only taxed at 7.5%. But because you have the income that's pushed you into these higher brackets, you'll actually pay 32.5%. So what we really do is, as accountants, when we obviously take clients on, we really do sit down, get an overview of your finances just to make sure you're aware of your taxes and where it sits at the moment. So if you were to set up a limited company, when you're taking money out of the company, you're aware of where you fall in the tax rates currently based on all your earnings. So that's like a key consideration. And then I'm going to talk about just the other associated taxes with a limited company. So these are all considerations that you'll probably have to make if you're going to set up a limited company. These are like the key things that we need to think about. So the next one is always, do I need to register for VAT? And essentially, you only need to register for VAT if your turnover is over 85,000, or you anticipate that it will go over that very quickly. I always say to clients, if you are not near that threshold, then there's probably not the additional requirement to register for VAT. You can voluntarily register for VAT, And I have had some clients do that, but it's probably more industry specific. So I have, for example, a coffee shop in Cornwall on my books, and they're not near the 85,000 threshold, but obviously she was setting up, she had to buy a lot of equipment, furniture, and all these things that we could reclaim VAT on. So it made sense for her to register for VAT because she could actually get the VAT back on quite a lot of purchases. So I think one of those things is, when you are setting up a limited company, when you're considering VAT, if you're not near the threshold, you probably don't have to register. And if you don't have loads of equipment to buy or anything like that, then it's probably not worth the additional administration of registering for VAT. But that said, it's one of those things that you would discuss with maybe an accountant when you signed up to like an accounting service. I've just put here, like, if you are going to register for that, it's usually really important to get, really organized with VAT, because VAT returns are done on a quarterly basis. And you need to keep your records very, very tight. I mean, you do anyway with a limited company, but even more so with VAT. You've got to be quite meticulous with keeping receipts. It's all about getting the right software as well. So accountants will always recommend accounting software for you, but it's always good to have like an accounting software that's easy to digest and manage. And I think there's probably another webinar in like talking about softwares and accounting softwares, so you guys have got scope of what you can use. Sorry, I'm just gonna cancel that. Sorry, that was always going to happen on a webinar, wasn't it? So some of the schemes that can help with cash flow. So we always talk about cash flow. Cash is king. You always need to be aware of what money in and what money out you have. There are some different schemes with VAT that you can utilize. So cash accounting is one of them, where if you are VAT registered, we account for what is actually been paid in and out. So very standard VAT accounting, you calculate your VAT on your sales on the invoices that have been raised and the purchases that have been recorded. Cash accounting is when we account for the VAT and report it to HMRC on what's physically been paid. So the difference basically is, if you've raised invoices in a quarter, even if you haven't got the money for them, you'll still pay VAT on them. Whereas cash accounting, actually just, you pay VAT on the amount that's been banked. So it just makes cash flow a little bit easier, because you don't want to be paying for VAT when you haven't received the money for it yet, because it's just not good for cash flow. And then I always say to my clients that if you're VAT registered, don't think of VAT as like additional income. So in this example here, I've got, like, if you've been paid 100 plus VAT, so £120, don't think of the £120 as what you've got in, think of it as the 100, because effectively the £20 will go to the VAT man on the VAT calculation. But again, accounting softwares account for that and make that quite clear. So that's probably all about VAT that you would need. I think what I do say is, if you're not sure about registering for VAT, it's one of those things that just get the advice of an accountant, because we'll be able to tell very quickly, based on your circumstances, whether you need to register or not. And then I've talked quite a bit about, the income less expenses. What can you actually claim? So I'm just going to give a bit of a summary here. So it's quite common that with the self-employed community and wherever I've worked, that quite a lot of people do their self-assessment themselves. If they're a sole trader or if they're a limited company, they sort of hire an accountant at the end of the year to do the accounts. And what you find is actually quite a lot of people have not sort of claimed enough expenses, or like there's things that they could have claimed they didn't know about, but it's the end of the year, so we can do it moving forward, but you could have saved tax during the year, sort of thing. So what I've listed here are quite a few expenses that you could claim, the common ones. If you're traveling to a business site, a temporary business site, you've got a contract for 3 months. It's, I'm in Oxfordshire, but it's over in Northamptonshire or something like that for 3 months. And I use my personal car. I can claim a mileage allowance that's approved by HMRC of 45p a business mile up to 10,000 miles, and then 25p thereafter. With travel, that doesn't just mean personal car, but if you were on the tube, any train travel or associated travel costs with a role that you're doing for a temporary period of time, then you can claim the travel. And what coincides with that is a thing called subsistence. So if you were going to that site, there's associated travel, you're there for a 3-month period, 6-month period. You can also claim for lunches. So like if, you go to like, Subway, somewhere like that, you'll be able to claim your lunch for that because there is associated travel to that temporary role. Training costs. So this is another one, is always claimable. If the training is to upgrade your existing skills or new skills to offer a new service, then you'll be able to claim it. So, the best example for me as an accountant, if I want to go on a training course for, I don't know, something like audit or something like that, it's a service that I'm going to start providing, then I could put the training costs through. What you can't do with training is put through training costs that don't have any association with the business that you're doing. So I've had people to be like, can I put my university course through? So that's like a big no-no. And just any training that's not necessarily, if I decided I don't want to be an accountant anymore, or I want to start, I don't know, a pottery course or something like that, I can't put that cost through my business because it's just not associated with my industry and my skills that I already have. So yeah, that's just one to be aware with training costs. We have quite a few common things here. So, your equipment, if you need a laptop for work, if you need a new iPad that's business use, office furniture. So I work in my office here, it's 100% business use. I don't do anything else in it but work, and I needed a load of, shelving, things like that. You can put those costs through the business. A PAYE salary, when we run salaries through limited companies, they're actually tax deductible. So part of working with an accountant is, do you need a PAYE salary to qualify you for state benefits and things like that? And if so, that's tax deductible, so it therefore reduces your profit and reduces your corporation tax bill. And this is what these expenses all do. They help reduce that corporation tax bill. Mobile phone expenses. So this one's a little bit different if you're a sole trader or a limited company. If they've got a director on the books, they can put the full cost through. So, if you've got a monthly contract, like for myself, for example, it's £40 a month. I can put the full cost through regardless of regardless of your personal use. It doesn't matter, you can claim the full cost. Whereas a sole trader, they have to apportion their cost to business use, whereas a limited company doesn't. And then we've got just some other things here, professional subscriptions or memberships. So anything related to your industry, like myself, for example, I have an accounting license, and my qualification, I have to pay a subscription every year to. So they're all allowable through the business. If you have the equivalent, you can put those through. We've got your accountancy fees, obviously. So if you engage with an accountant for a monthly fee, then that's also allowable through the business. We've got a few others here, your typical marketing, stationery, postage, pension contributions as well. That's tax deductible. So you get tax relief on pension contributions to your personal pension pot. So say, for example, I paid into my own pension pot from my business, I will therefore save on corporation tax. So it's always a tax efficient way to pay into your pension pot. We have a thing here called trivial benefits, which is a sort of a tax perk. There's also one called annual party allowance, which basically HMRC says if you go for So say Tax Ninja and myself, I've got me and my wife that run the business. We go for a dinner at Christmas time. You can actually put that through the business as an allowable expense, and it's call it our annual Christmas party. So, and then there's a thing called trivial benefits. That's a similar claim where you might buy flowers for your wife or husband, and it's called trivial benefits, and it's up to £50 a time. So there's things that we can claim there as well that you probably pay for anyway. You never thought about any tax implications, but actually they can go through the limited company. So it's like these small quirks to the tax system that some people just wouldn't know. And then we have working from home allowance. So again, the pandemic's brought this on more than ever, that if you work from home, HMRC have like this approved amount, which is £18 a month, that you can claim without any sort of like justification. HMRC approve it. If you claim it, that's absolutely fine. Or you can apportion your costs. So, for myself, I could look at my water, gas, electric bills and apportion those costs based on the room I use. So say I have like 6 rooms in my house, I take my electric, gas and water for the year, and I portion it to 1/6 because I use one of those 6 rooms for my business. And you can make a claim there. So what we do is we have a look at what's more efficient really. Does it make sense to have portion costs, or do we want to just stick with the HMRC approved amount? And it's all about building this picture to save yourself as much corporation tax as possible, because if you are paying for some of these things already through your personal account, you get no benefit to doing that. You want to put it through your business and save yourself on corporation tax. And I touched on this a minute ago, just about a PAYE salary. So this is the next sort of area of a limited company where accountants will advise you on, do we need to run a PAYE salary? And this is really dependent on what you've earned so far this year. So if you do have other sources of income in a tax year and you've used your allowances up already, then it's unlikely that you would need to run a salary because you qualify for state pension, state benefits, maybe your maternity, paternity pay. There wouldn't be a benefit to running a salary for you for that tax year. We would wait until you've got a clean set of tax rates again, so like a new tax year. So say, for example, you come to me now and say, right, I want to set up a limited company. I've already earned £30,000 this year, for example. You've already qualified for all your state benefits and things like that. So there's no more requirement for us to run a salary for this year, because what will happen is we would run a salary, we'd have to declare, we'd put you on like a tax code where you're like either paying like 20% tax anyway, and then the tax saving is only 19%. So actually the benefit doesn't really outweigh the tax you would pay on the salary anyway. So we'd probably advise, okay, in this case, it's probably more efficient to wait until you've got a new tax year, a clean set of rates, and then you can have your mix of salary and dividends. And again, I mentioned here, you save 90% corporation tax on the salary that is run through the company, but of course, we decide on whether that's sufficient or not. And what we also can do is, with a limited company, we can also look at, it might be beneficial for your spouse, husband or wife, to have a salary as well. So, your wife might not be working, she might be staying at home looking after the children, or your husband looking after the children. They don't necessarily work. They've got a whole set of tax rates that you could utilize. So it might be that they do some administration for the company, keep your books in order while you're out working. We could look at running them a salary, qualifying them for the, the state pensions that they might not be qualifying for. And we can also look at that as in shareholding as well. So when I've talked about paying yourself as a dividend, dividends are paid out based on the shareholding of the company. So when you set up a limited company, usually accountants will set you up as the 100% shareholder. But what we can do is look at your spouse's income and decide, actually, it might be efficient for them to have a shareholding as well. Because then when you pay out dividends, instead of, say, for example, a very rough example, you have £100,000 of retained profit, and you're like, right, I want to pay this out. If you were the 100% shareholder, you would use your 7.5% rates, and then you would go into your 32.5% rate. Whereas if, say, you had say your spouse doesn't have any income or anything like that, you could split the shareholding 50-50 and keep you both in the 7.5%. There's a very basic example. There's many variations, but so what we do is we work with you just to make sure that you're as tax efficient as possible. Because what some people do is they don't hire an accountant; they do it all under themselves. And then actually, we could have saved them tax because we could have like split the shareholding or given them a small percentage of the shareholding. And that's what we do as accountants, is just make sure that the whole tax picture is as efficient as possible. So these are just some considerations about, setting up, payroll when you are a limited company. And then that's a very basic overview of a limited company. The very basic considerations at the start that you would need to, have a think about, and then obviously approach an accountant. And, I've got my own service here. So I've got Tax Ninja, obviously being partnered with Liberty Hive and the ladies, we've managed to come together with some discount for Hivers. So 10% off my monthly accounting subscriptions. They start at £45 a month for limited companies. And you get 10% off with the code Hivers21 on my website. If you ever needed a tax return, just a one-off tax return, maybe you got rental income or things like that, then it's 20% off the cost on that. So, and then that's a very basic overview of a limited company and sort of the workings that you will need to consider and just have a think about when you're deciding whether you need to set up a limited company or not. So, I mean, if anyone has any questions, feel free to far away, but
well, thank you, Jamie. I think there's a few questions certainly going up on the chat. If we just go through some of those, and then, as I say, if anyone's got any others, just jump in. One of the first questions: can you actually help people set up as a limited company? So go to company's house, advise them on how they actually do that.
Oh yes,
yeah. So you can start right at the beginning and help someone go, right, okay, yep, I'm all bought into being a limited company. What's the next step? You could literally start them on that.
Yeah, 100%. So probably should have popped it in that last slide there, but I offer a free company formation on any of my plans. So basically I will set them up a limited company. And what we usually do is have that chat first about the shareholding that I was talking about earlier. So it's like, okay, let's look at your income as a family or whatever it may be, and we can decide on the shareholding, and then I just do the setup. And a limited company actually is quite a quick process to set up. It takes around 24 to 48 hours from submission. But yeah, I can help.
You can help do that. That's brilliant. And then obviously you talked about accountancy software. Mm-hmm. Again, I presume you could help advise on what accountancy software is going to suit what person, depending on sort of income and all the rest of it. Yeah,
exactly. And I think it's probably a really good little another small webinar that we can do, or another bit of content we could push, Kate, because there are different softwares and some of them are more integrated than others, and some. So say, for example, in my practice, I use a thing called Free Agent. That's just a really good piece of accounting software for consultants and things like that. But then, like I said earlier, I have a coffee shop that it has a POS system. It needs like a lot more integration. So we use Xero for them. And then my sole traders, I mean, I've still got a bit of loyalty to Coconut from leaving them. and we use Coconut for those guys, because they don't need the level of integration and reporting that a limited company does. What I haven't mentioned is on all my plans I provide software for my customers, so I'll cover the costs. So again, it's it's one of those things. I really look at the personal circumstances and what will probably suit them, because in accountancy, certain practices will push you down that route because they're just partnered with them, whereas I think it's more on an individual basis as to what software will suit someone.
And then another question was just on the receipts, and I know Laura and I have had we struggle with this as well, but do you need receipts on everything? Because quite often what happens is you pay for something on your credit card and then you might not have the receipt. Is it good practice or to do that, or is it actually necessary?
Yeah, it is necessary. I've had before some investigations into my clients in previous roles where it's like they've gone, oh, but it's on the bank statement, you can see that it was like TFL. So those ones are quite clear that it probably is business use, but it's the more obscure ones, like if you spend like £50 in Sainsbury's, you could say that was stationery. It shows up on the bank statement, but I don't have a receipt. And HMRC take this really like black and white view. They're like, you haven't got the receipt, you can't prove that it was stationery, it could have been your £50 food shop or something. So I always say it's just really good practice to take photos of all receipts. Like all the softwares out there, even the banking apps these days, I use Starling, and that pushes me to take a receipt of all my as soon as I've like purchased on a Starling, for example. So try and keep all receipts where you can.
Okay, and there is some other, you mentioned Starling, and I know we certainly do that. So every time we pay for something, we're like, picture straight onto the Starling account. But there are other apps, aren't there, like was Receipt Bank, that's now Dexed. And again, I think Lisa asked this question, and having gone through that process, there are some really easy ways where you can collect all your receipts and then upload them to somewhere to keep them in one place.
Yeah,
you can upload on as well.
Yeah, 100%. So it's not only the accounting softwares, but it's the banks as well, isn't it? I mean, like even, Coconut, for example, as soon as you sort of like have a transaction come through, it's prompting you. Like, I think the education around receipts these days is you just got to keep records where you can. If you don't have the records for them, then it's probably unlikely that we would claim it. Just as a like insurance, because, I think I was looking and reading a statistic. Reading a statistic the other day that 7% of people get investigated. So what we always say is it's quite a low chance of investigation, but you can never say never.
Yeah, so it is good practice, even though it's the right path. And I'm with you on that. Lisa, who asked the question. Another question is just around the party allowance. Yeah, that sort of my ears pricked up at that one as well, I think. So party allowance and trivial benefits, are they just for limited companies, or if you were a sole trader, would that be something you could also push through?
Those ones are specific to limited companies. And that's probably like, these are the little differences between sole trade and limited company. That these are just in particular for limited companies on HMRC guidance. So yeah, that one will just be for a limited company. But
brilliant, thank you. I don't know if there's any other questions that anyone had. Nothing's coming up on the chat. Danielle has put in some a page website there to go to. I'll give you some more information on how to get in touch with Jamie. There's some more information there going on the screen now. Or similarly, please do get in touch with Laura or myself, and we can go from there.
Yeah.
Thank you everyone for joining today.
Yeah, thank you. Really appreciate it. I just saw that there was one about more info on IR35. So I think that's another one that we can maybe talk about doing some more content around. But if you've got any specific questions or queries, like I say, I've got my details there, so drop me an email if you've got any questions or queries that you don't want to post on a public chat. But yeah.
Excellent. Thank you everyone for joining us, and we look forward to speaking to you all soon. Thank you. Oh, one more question, sorry. Are the slides going to be available, Jamie?
Yes, I can share those.
We'll share those. We've got everyone's address, so we'll share those post this, and we've been recording this, so again that will be shared as well. Thank you. Speak to you all soon. Thank you. Bye.
Yeah.